Greetings. Before we continue to the next business as we had agreed, I would like us to look at these questions. They are questions I received previously from one of my social media pages. People are asking different questions, and I would like us to look at them. Though to these, I also added some frequently asked questions on insurance. So we'll look at some of them, not all of them, because there are quite many. So as we discussed in our earlier videos about life insurance, we discovered that actually life insurance is a tricky topic, because some people would perceive it as something they buy, not as a saving, like as a saving service, yet it is a saving service. And besides, it is also designed to provide your dependents with financial support, like those people who depend on you, your family and relatives. But still, permanent life insurance can be used to access money for big purchases. Like if you have a permanent life insurance policy, you can use it to access big sums of money and make big purchases through policy loans. Like for example, different companies have different conditions for someone to qualify to get a loan. So it depends on the conditions of the particular company that you actually insured with. So some of the questions we're going to look at: how can you, number one, how can you avoid insurance frauds? These frauds are not common, but actually people are skeptical. And one way that actually would avoid them is by making sure that you actually save with a company whose background you're sure of, its historical background, its financial base. If you're to save with a company, it would be better you save with a company that has actually stayed for some good time in operation and that has big operations. Like for example, because it is from its operations that you can be sure of its financial base. Now, you look at a company actually with that, at least a company that is actually has stayed for some good years, and a company that, now let's say a company that has branches or sub companies in more than one country would be a good option, because you're sure that even if what comes, it will be very rare for this company to run out of business for any reasons or the other, because they have a big financial base, more than companies that actually are based in one country with a few offices. You get such a thing? Because just like banks, insurance companies are financial institutions. We've been seeing banks running away, and maybe sometimes not because they would like to steal the people, but they failed financially and they can't take it on. So it is the same thing. You just have to make sure that you know the background and you're saving with a company that has actually been in business for some good time. And then the other thing you would consider is how much. The other question is, how much does life insurance cost? Now, the cost of life insurance will vary from a broad perspective, because insurance is all about risk. So the company will look at the risk how should I call it? The risk it has to handle by allowing you to save with them. So like for example, a person who is highly risk cannot pay the same amount like a person who is not highly risk. Now if you take an example of soldiers are highly risk according to their occupation, so they can't pay the same amount of money like civilians, people who do risky activities, such things. So things like that are considered. Now the medical condition of someone is also considered. And then how does the company determine the risk involved? Now when you're actually applying to save with the company will that will give you a form, which form you fill, and then according to the questions on that form, the underwriter will base on those to determine how highly risky you are, or the level of your risk, and then they will determine how much you actually have to pay. Then the other question is, what types of insurance can I choose from? Now first of all, you should understand that insurance is divided into, basically life insurance, into two. There is term insurance and then permanent insurance. So term life insurance has a guaranteed level of premiums for a fixed period of time. Like for example, that one can be fixed for 10 to 20 years and so on and so forth, depending on the period you choose. But then permanent life insurance is designed to cover you for a lifetime. It is a lifetime policy. And then the ability to maintain the cover, the permanent life policy, you have the ability to maintain this permanent policy, even when you get problems that would actually, like for example, there are certain risks that there are certain problems the company would not insure someone if they had them. You get, like someone who has cancer, the company may not insure them. But if you've been having this permanent policy and then with time you develop cancer, you will still maintain the policy. So that is what it implies. Then how much life insurance should I consider? Now when you get to this point, normally people want to have large sums of death benefits. Like when they die, their families get large sums of money that can actually meet their needs. But then this how much you pay, like, because the question is how much life insurance should I consider, like how much should I think of paying? So this amount will depend on your financial ability and then your family needs. So those two factors will dictate how much you have to pay. And then the other question is, how are death benefits paid? Now when we look at death benefits, these are paid, the way you structure the death benefit will depend on your family and your goal. So it depends on your goal and your family's goal. So the way you structure it. In most cases, it is structured in a lump sum, whereby when someone dies, their company receives the whole amount of money. They receive it as a whole lump sum. And then the other way is you can decide to have it paid on a monthly basis, so that the company keeps paying them on a monthly basis until the whole money is completed, until the whole payment is made. But someone can also choose to have it paid into their retirement account, such that it acts as savings for their spouses. So those are the different ways it can be paid. But most commonly, it is the lump sum, where that is commonly used. Then the other question is will my premiums change or increase over time? Now premiums will not change over time, unless you go to your insurer and you ask them that I would like to change the money I've been saving, I would like to increase or decrease. So that will depend on you. But if not so, it is very rare the money may not change, because it is fixed. It is a fixed amount of money that you save. Then the other question is, how can I save money and still get the cover I want? Like, how can you save and still get the cover? Now for insurance, saving and getting the cover, when you save, you obviously have the cover for life insurance, because these covers are given as a benefit for saving with the company. They're the main benefits of the company, because main life insurance is looking at risk management. Risk is the main aim of insurance. So meaning when someone saves with us, actually they are assured of the life covers. And then the other thing is, what is the difference between group life and individual life insurance? Now, just like we've seen earlier in the other question, that group life insurance is a product provided by an employer, that when someone is being employed somewhere, they do what? Their employees provide this type of insurance. It is provided by the employer. Sometimes the employer will cover the premiums. Other times, group life is an optional benefit. You choose whether to purchase it or not. So it is optional, but the employer is the one that provides this insurance. And then the individual life insurance is a product that you own yourself. Like, you purchase it yourself and you own it yourself. So it is separate from anything that has to do with your work. It is you and you yourself, it does not have anything to do with your work. And then group insurance can times be slightly inexpensive. When like I was saying, that group insurance can at times be less expensive. However, there are many drawbacks and restrictions to group life insurance policy that you may actually need to be aware of. So it is inexpensive sometimes, but it has drawbacks and some other restrictions. I'd skipped the other question that I've made reference to. The question is like, do I need life insurance if I already get it through work? That sometimes have their employers insuring them using the group insurance. So someone is like, do I need another insurance policy or an individual insurance policy even if I have the group insurance policy? So the answer is obviously yes. Why? Because group insurance that is provided by the employer, first of all, it is affordable and easy to enroll without a medical exam. However, group policies may only pay an amount that is equal to 1 or 2 years of your salary. And then it may not be enough for your family needs. So it is limited in one way or the other. And then the other disadvantage with this is that when you quit your job, you will not go with your cover, like your policy, because it is the employer that was providing it just because you're working for them. Now when you go, you don't go with the cover. And then the other thing is that when you consider the fact that the older you grow, the more expensive it becomes to attain life insurance. So for that case, it would be better you have your own individual life insurance policy to supplement that one provided by your employer, because anytime you may quit your job and you need a life insurance policy, but now at that time, because you've grown older, it is expensive. Why does it become expensive with age? Is because the older someone gets, the more risky they become. The risk of an 80-year-old individual is not the same risk of a 20-year-old individual. So that's the reason why. And then the other question is who do I buy key personal life insurance for? Who do I buy key personal life insurance for? Now, key personal life insurance is an insurance that is provided by a company or any business to their main, because in a business there is that main person the business stands on for revenue. In that if that person goes, the business may incur a loss. So to avoid that, the business insures that person that when they go, the insurance company will compensate that loss that will be attained in that period of time as they get another person to replace that one. Currently, those are the questions we'll be in position to look on. Bye bye to insurance. Maybe any other time when we get something else to look at.